Ladies and gentlemen, D.R. Horton reported earnings and they are navigating a changing housing market. So let's dive into their earnings report. I'm NovaPM and this is Wealth Dawn and I'm bringing you economic news. So let's get started with D.R. Horton, which are down for the entire year, minus 4.79%, but they're up for the last 5 years, 160%. So not bad at all. Maybe they're going to have a comeback in 2026, I would say. Not in 2025. I wouldn't count on that. So let's go over the key features. I grabbed here a couple of key aspects from their presentation, from the earnings call. So let's go over them. Let's start with earnings exceeded their expectations. D.R. Horton reported a EPS of 4.10 dollars a share, surprising analysts. Consensus estimate of $3.85 a share. Now the revenue growth, despite market fluctuations, revenue increased by 8% year to year to $9.2 billion, demonstrating resilience in a changing market. They also had a strong order backlog. The company maintained a healthy order backlog, indicating continued demand for new houses. They also focus a lot on affordability because D.R. Horton continues its focus on building affordable homes, where they just cater to a more broader range of buyers. Now, overall, the impact of rising mortgages interest rates impact affordability and buyer demand. Don't forget that we could see that's what I mean by 2025 not being the year, because if we're only talking about 2 rate cuts, well, those won't impact D.R. Horton's massively revenue for this year, but it will impact it for 2026. If these rate cuts happen and more rate cuts will happen in 2026, then we could see a bump in their revenue. Okay, now let's move on with the key dynamics here. D.R. Horton earnings reflects the company's ability to navigate a complexity of problems here with the current housing market, of course. A couple of key observations that I took away here is that balancing price and volume, where the company effectively balanced their pricing strategy with sales volume in response to the changing market conditions, I would say. Also, strength in entry-level markets. This is really important. D.R. Horton's focus on affordability homes provides a buffer against the impact of rising interest rates on higher-priced homes. So don't forget that although we are preparing for low interest rates, but the prices of the homes are impacted by also wage growth. So interest rates fall, but prices rise due to wage growth, due to the fact that people need more money because stuff is more expensive. So it does impact the housing market. Now let's talk about supply chain, the last key factor here, which did see a bit of improvement. Their easing supply chain constraints contributes to improved construction timelines and profitability. So the sooner they're done with their homes, they can start the new one. So let's see, the strength, of course, is that they're focused on entry-level markets and improved supply chain. Okay, now looking ahead, mortgage rate trends is one of the impacts, the outlook for future revenue. The direction of mortgage interest rates will significantly impact buyers' affordability and demand. Also, overall economic growth and employment levels will play a crucial role in the housing market stability. And of course, housing inventory levels, because it's always a question of supply and demand. Because the balance between housing supply and the demand will influence the pricing and the sales. So let's just say that in conclusion, D.R. Horton's earnings demonstrate that the company's strong positions in the housing market and its focus on affordability and efficiency opportunities, which is positioning them really good to navigate these markets for the entire year. So that's it for D.R. Horton. I'm NovaBM. This was Wealth Dawn, bringing you another earnings report. Don't forget to like and subscribe. Catch you next time. Bye-bye.